Okay, this is timing strategies for July the 3rd, Thursday, 2007, but this is being posted on July the 5th, 2007, Saturday, because of the holiday effects and so forth. I want to apologize. I'm having some tech work done on the website, or some website work done, and about 5 or 6 of the most recent postings up until June the 11th have just gotten scrubbed. I've got to repost those and resubmit them. I'm not a tech guy. I have somebody else do the construction work, so to speak, and I just do the updates. And when what happened, it basically lost about the last 2.5 weeks of data or postings and info. So I apologize. I'll try to put those up as soon as I can. But this is just the update for the most recent allocation. So what we did, we got long basically 60%. We had a hedge on. We were long the Dow and the S&P, the financials, and the gold sectors from that point back on the 27th. We held that long, which worked out, looked like it was going to work out on the 1st, which I believe was Monday. Or no, Tuesday. It looked like it was going to work out. Wednesday, it did what we saw, and so we reduced our long exposure. We were still long, but we cut it down by about a third or half. I don't have the exact notes in front of me. Today, or Thursday, July the 3rd, we went back long again, so that's going to be right here, and we're long effectively about 60%. Again, I don't have the numbers with me. I'm posting this on a Saturday. I got to get home to see my kids, so this is going to be a quick post. Anyway, so we are back net long in the accounts right here as of July the 3rd. We are long the Dow 20%, the S&P 20%, and the NASDAQ 20%. And what I want to bring, because even though we were short the NASDAQ on our previous spread or our hedge, using the Qs as a proxy, we got long 20% on the NASDAQ. We are still short 20% on the Russell for our long short accounts as that hedge. The reason why, I can go into it later. If you want some more detail, give me an email. I'll send you back my reasonings. But so again, we're long 20, 20, 20 Dow, S&P, NASDAQ. Right now, for me, the Dow, using the diamonds as a proxy, is the strongest looking of them all. Well, obviously, it shouldn't be as volatile as it was, and so probably my estimations and filters are showing me that if we're going to get a bump, it's going to come, probably the strongest bump is going to come out of the Dow, for whatever reason that may be. We are also, again, long using the financials, Ridex, banking and financial sector, split 20%, again, as of here. And we are long also the precious metals from a while back, actually from this breakout or reversion point, and we're still holding that long 15%. But again, we're short 35%. The Russell, and using the IWM as a proxy, we're still short 35% on the IWM. What I see happening using the S&P as our marker is what I'm looking for. Here is worst case scenario. Worst case scenario, come in Monday, Tuesday, we trade down. Let me take that magnet off. And let me fix this real quick. Okay. Now, what I'm looking for happening at the worst case Monday is we come down, hit our B2 buy point on the S&P or the spiders of about 123.5, which we pretty much hit very close to the other day, Thursday, but as deep as 123.5, which would be 1235, to as deep as 122, which would be 1220 on the S&P cash. Worst case scenario, we hit that, and the very next day, and on that same day, we should close back above the lows of last week. And Jesus, that's what's happening here. Damn software. And I'm looking for that trade in the next day or two, or it might even happen starting Monday, trade all the way back above the lows of the 27th of June. We got to get a trade basically back above those lows right there on the 27th on the spiders. And we got to get a close back above there, which wouldn't be very difficult to do. If we can get a close that trades at least back above that point right there, and hopefully you know, if they really want to get the shorts leaning and everybody Goldilocks cheering again, wipe out the highs that we saw put in on Wednesday. So if we can get back above this point at the very least, to hopefully even higher on a closing basis above about 1280, things are going to be a lot better for a longer term. And what we're ultimately looking for is to reestablish that short position right up here at around 1335 or 133.50 on the spiders, to as high as 137.50 or 1370 on the S&P. That's about it. Don't have a whole lot more. But again, we are now long. Again, right here, as of Thursday the 3rd, July the 3rd. We'll see how this works. Best case scenario, and I'm going to cut this short here because my mind is somewhere else. What we could see, what I'd love to see, is we see a gap up open on Monday. This would be ideal. Does not close that gap, meaning we leave some air between the highs of Thursday and the opening and the low, and we trade all the way back above the highs of Tuesday. And that gap, the higher that gap comes in at, without taking out or without closing that gap in between here, and let me give you a little more depth here on the move. The better that we can do that, the more that we can put in between the highs of Thursday and the lows of potentially Monday, and then take out the highs of Wednesday. If we can do that, that is about as much of a gift as we can possibly get, and then just expand, boom, as high as possible up into that range. That would be ideal, but that's probably not going to happen. That's what I'm hoping for. It very rarely works out the way I'm hoping things to work out. But if it does, hey, you know, we get lucky sometimes. And again, worst case scenario, we're on the lookout for worst possible scenarios. We trade back down to here. As long as we don't close below that B2 level. We cannot close below that B2 level. We can trade down to it. We just can't close below it. And we'll see what happens. We'll keep you updated next week. So I hope everybody had a good 4th of July. Feel free to give me a call or an email, and we'll be posting again soon.